Pump or dump and investments are the twin questions hanging over XAN Coin as it emerges from niche chatter into the broader crypto conversation, capturing the imagination of retail traders and cautious institutional observers alike, and sparking endless debate about whether it is poised for a meteoric rise or destined to fizzle like so many speculative tokens before it. To explore this, we need to unravel the coin's origins, its underlying technology, the behavior of its community, and the wider macro environment shaping digital assets today, because XAN, unlike legacy projects such as Bitcoin or Ethereum, sits at the intersection of bold technological claims and the hyperactive culture of decentralized finance, promising to blend privacy-focused smart contracts with lightning-fast settlement times while also courting decentralized application developers through low fees and a modular architecture. Yet even with these ambitious goals, the market's lens is inevitably focused on price action and the psychology of speculative waves, making it essential to separate temporary hype from sustainable value, a task that requires both a granular understanding of the tokenomics and a macro view of the economic conditions that drive risk appetite. At the heart of any pump or dump inquiry lies token distribution. XAN's white paper outlines a circulating supply schedule to expand gradually over 5 years with a halving-style emission every 12 months, designed to limit inflation and encourage long-term holding. But skeptics note that nearly 20% of the total supply remains in the hands of early backers and foundation wallets, a concentration that can spark sudden liquidity shocks if those holders decide to sell, especially during periods of high volatility. And this concentration risk is often a red flag for cautious investors who remember the lessons of prior rug pulls or sudden dumps when insiders cashed out. On the flip side, proponents argue that the project's transparent smart contract governance, audited by reputable third-party security firms, reduces the likelihood of stealthy manipulations, while its staking mechanism rewards high-to-network activity rather than simple inflation rates, a built-in incentive for token holders to remain engaged and aligned with network health. Market momentum is another decisive variable, and XAN's recent chart shows the classic signs of early accumulation followed by bursts of volume-driven spikes, patterns that can easily invite momentum traders and social media influencers seeking quick gains. And this dynamic often fuels the very pump and dump cycles that leave latecomers holding the bag. Yet it can also mark the early stages of organic growth if the underlying fundamentals justify increasing demand. To evaluate that possibility, it's worth examining XAN's ecosystem traction, where we find a small but growing cadre of decentralized finance applications experimenting with its sub-second finality and cross-chain bridges, including micro-lending platforms, NFT marketplaces, and experimental gaming economies, all of which could generate real transaction fees and utility that supports long-term token value. Furthermore, XAN's development team has adopted a governance model inspired by the more established DAO frameworks, allowing token holders to propose and vote on protocol upgrades, treasury allocations, and strategic partnerships, a level of decentralization that, if executed properly, can create a resilient, community-driven project less susceptible to unilateral decision-making and more attractive to institutional players who value open governance. Yet, as crypto history repeatedly demonstrates, even the most elegant technology and governance can be overshadowed by the realities of market cycles, regulatory pressure, and macroeconomic shifts. When global interest rates rise or risk-on sentiment wanes, speculative assets often face sharp corrections regardless of individual merit, and XAN would not be immune to these forces. Investment analysis therefore demands a multi-layered approach, fundamental research into code quality, network security, and developer activity, technical analysis of price trends and liquidity, and sentiment analysis across social platforms where coordinated hype or fear can dramatically influence short-term moves. From a fundamental perspective, open-source repositories show a steady cadence of commits and protocol updates, suggesting an active and competent core team, while early testnet reports highlight impressive throughput benchmarks that rival high-performance Layer 1 blockchains. Still, security remains paramount and contract exploits and bridge vulnerabilities have drained billions from the crypto ecosystem over the past few years, and even well-audited protocols can harbor latent bugs. Prospective investors would be wise to scrutinize audit reports and monitor for any disclosure of critical vulnerabilities. On the technical side, analysts observe that XAN's liquidity across major decentralized exchanges remains relatively thin compared to blue-chip assets, a factor that can exacerbate price swings, enabling both dramatic pumps during periods of intense buying and equally violent dumps if sentiment turns. This thin liquidity also means that large holders can influence price with relatively modest transactions, again underscoring the importance of understanding concentration risk. Regulation adds another layer of complexity. Governments worldwide are tightening oversight of digital assets, focusing on securities classification, anti-money laundering compliance, and consumer protection. XAN's privacy-enhanced features, while appealing to users seeking confidentiality, may draw particular scrutiny from regulators concerned about illicit finance, and any unfavorable rulings or enforcement actions could curtail exchange listings or dampen institutional participation. Conversely, if XAN can demonstrate robust compliance tools as optional disclosure mechanisms or partnerships with regulated custodians could carve out a niche as a privacy-respecting yet regulatorily acceptable platform, potentially boosting long-term adoption. From an investor psychology standpoint, the pump or dump debate often hinges less on fundamentals and more on narratives. Is XAN seen as the next big thing, a meme-fueled rocket ship promising life-changing gains, or as a sober technological advancement offering steady, utility-driven growth? Right now, the narrative seems to straddle both worlds. Social media threads overflow with moonshot predictions while developer forums maintain a more measured tone, emphasizing incremental progress and real-world use cases. Savvy market participants recognize that hype can be both a blessing and a curse, capable of attracting users and liquidity in the short run but also setting the stage for painful corrections when reality fails to match sky-high expectations. The optimal strategy for those intrigued by XAN may therefore involve disciplined position sizing, dollar-cost averaging, and a clear exit plan rather than all-in speculation, combined with continuous monitoring of on-chain metrics such as active addresses, transaction volume, and staking participation, which can reveal whether usage is keeping pace with price appreciation. Another crucial factor is competition. The blockchain space is crowded with fast, scalable Layer 1 solutions and cross-chain protocols, each vying for developers and users. Projects like Solana, Avalanche, and newer entrants offer formidable performance and established ecosystems. XAN must differentiate itself through unique technological advantages, superior developer experience, or targeted niche partnerships focusing on privacy-preserving decentralized finance or seamless interoperability to sustain long-term relevance. Without a compelling competitive edge, even technically sound projects can languish once initial excitement fades, leaving speculative investors disappointed. Macroeconomic conditions cannot be ignored. In times of loose monetary policy and abundant liquidity, speculative assets like XAN thrive as investors chase yield and alternative stores of value. But if global central banks maintain higher interest rates to combat inflation, risk appetite may wane, and the entire crypto market incaping promising projects to endure prolonged drawdowns. This cyclical nature underscores the importance of time horizon. Those seeking quick gains may find the pump and dump dynamics perilous, while long-term investors who believe in XAN's technology and adoption trajectory might weather volatility with a multi-year perspective, provided they can tolerate the inherent risks. Ultimately, deciding whether XAN is a pump, a dump, or a viable investment demands balancing excitement with caution. The coin exhibits several bullish indicators in technology, a transparent governance model, a growing developer ecosystem, and early signs of community engagement. Yet it also carries significant risks: concentrated token holdings, thin liquidity, regulatory uncertainty, and the ever-present threat of market-wide downturns. The prudent approach for anyone intrigued by XAN is to treat it as a high-risk, high-reward opportunity, allocating only capital they can afford to lose, diversifying across other assets, and staying informed through reputable sources rather than relying on social media hype. The question of pump or dump may never have a simple answer, because markets are not static. Respond to evolving technology, investor behavior, and macroeconomic shifts. For now, XAN remains a project with potential and peril in equal measure, offering a case study in the volatile dance between innovation and speculation that defines the cryptocurrency landscape.